Friday, February 18th, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at whether big money, investment firms like Berkshire Hathaway or others are moving into gold. Before I start though, I like to say Billy and I have been out. It's quite windy out there. There's a big storm coming over Britain called Eunice. We were supposed to have 70-mile-an-hour winds in the south of England. And they're saying it's one of the biggest storms since 1987. And that's really interesting because the Great Storm of 1987 happened on a Thursday and a Friday. And then on October 19th, following the weekend after the storm, there was the big stock market crash where the Dow dropped, I think 20%, maybe a little more. Am I saying that's going to happen this time around? No, it's just an interesting coincidence, I would say, that the stock markets seem to be under a lot of pressure and we're getting this storm coming. So back to gold and back to whether big investors, the big money, are starting to actually throw the towel in terms of trusting the Federal Reserve to contain inflation. And yes, we've been warning about this actually even before the '08 crisis. And why is that? Well, because we thought, or me, that the mindset of the leadership of the Federal Reserve was set in stone in terms of helicopter money, in terms of QE. And you only have to go back to 2002 to Bernanke's speech about the fact that the Fed can just create reserves out of thin air and that deflation would never happen. And at the time, he was not the chairman of the Federal Reserve, but you could see that they were pushing him towards that post, and eventually he became chairman, I think in probably around 06, 07, I don't remember exactly when. And then you had the '08 crisis, and he used the so-called QE tool. And yes, QE in '08, '09, I think was the trigger, was what made me certain that we would have massive inflation, and if not, currency collapse. And I've been talking about that ever since then to friends, colleagues at work, to family, and to the world, so to speak, through YouTube since late 2015. Yes, probably have been ridiculed for talking about hyperinflation. I made a video a few years ago saying that if it happened in Venezuela or other countries, third world countries, it could happen here too. And now you have one of the most successful investors. Well, he's a partner with one of the most successful, arguably the most successful investor of the last 50 or 60 years, Warren Buffett. His partner came out in an interview with Yahoo Finance, and he sounded a little bit like me. And the guy, I respect the guy because he's 98. He's been around the blocks, and he seems to know his stuff. Yes, and I looked through his biography on Wikipedia. His name is Charlie Munger. He's a trained lawyer, but he's been co-chairman of Berkshire Hathaway for many years. And this is what he said, and I'll play it here. I'm taking this from Twitter, Wall Street Silver, who you should follow on Twitter and on YouTube. They tweeted this out, a clip. I'm just going to play this one, and it's very telling what Charlie Munger is saying now. He's worried. He said that inflation, along with nuclear war, is the biggest threat to society. And it's interesting, I looked through his biography, as I said, and he actually worked for Warren Buffett's granddad, who owned a grocery store. And I've spoken also about Warren Buffett's father, Howard Buffett, who was a congressman from Nebraska. And he wrote how without a gold redeemable currency, you can't have human freedom. So I'm sure, being a friend of the family, Charlie Munger probably had a lot of chats. I'm speculating here, of course, but he probably had some chats, interesting chats about money, markets, and politics, society with Howard Buffett. But I'm going to play this now.
So it's the biggest long-range danger we have, probably, apart from nuclear war.
Is it something investors need to be worried about, specifically when it comes to growth stocks right now?
Well, I think the safe assumption for an investor is that over the next 100 years, the currency is going to zero.
So there you go. His long-term forecast is probably longer than mine, 100 years, that the dollar could survive another 100 years. I think it's because he's looking at the Roman Empire, because, the currency there, the denarius, which was a silver coin, went from having about 95 to 98% silver content around the beginning of the 3rd century, which is like 200 AD. And by 476 AD, of course, there was nothing left. The coins were base metal coins. The Roman Empire had collapsed. So I think he used 100 years, maybe not to sound too alarmist, but I would say 10 years is realistic as well, seeing that the dollar that the Fed took over in 1914, I know they were created in 1913, but they only came into operation in 1914. The dollar of 1914 is only worth around 3.5 cents, according to the Fed's data. It's probably even lower. So we've already seen the currency collapse. The thing is, the last 2 to 1% can be very quickly. I think it's like the old term that when you go bankrupt, it's slowly at first, and then it's all of a sudden it speeds up and you're out of business. And a currency is the same thing, I would say. So it's interesting that people like that are warning about inflation, and that's why I said, are big investors losing faith and confidence in the management of the currency? And that's got to do everything to do with the government and the central bank. So now I wanted to look at a couple of mining stocks, and these are securities that I hold, gold miners that I hold. And they're Newmont Mining and Barrick Gold. They're the biggest gold miners out there. They have, they find a lot of gold every year. They're different from the small miners or the explorers or exploration companies that are actually looking for gold, prospecting. These companies, they're probably the ones that will buy these small companies once it's proven that there's gold on those properties. So investment firms like Berkshire Hathaway, and they're not a hedge fund, they're long-term investors, and even hedge funds and others, mutual funds, it's harder for them to buy physical gold. So what do? They buy the gold miners. And I remember in 2020, after the Fed embarked on its massive stimulus, and the government as well, that Berkshire Hathaway announced they had bought Barrick Gold, but then at the end of the year they announced they had sold it. So I'm wondering now with the way Charlie Munger is thinking, and I don't know how Warren Buffett is thinking right now, but probably very similarly to Charlie Munger, is it possible that they are buying Newmont and Barrick Gold? I just wanted to show you these charts here because these companies have moved up quite a bit, especially in the last week or so. As you can see here in these daily charts, Newmont is gone from below 60 at the end of January, and we're now at 67. And you've got Barrick Gold here in the last week. It's gone from below 20 to above 23. And of course, they announced some results a couple of days ago. They also paid dividends, which is something that Berkshire Hathaway would be interested in because they need a income. That's how these investors think. So yes, I think it's very possible that the big money is going into Newmont, Barrick, and others. Yeah, and I do hold both of these securities, and this is not advice to buy these securities. I'm just talking about it. I do have some smaller junior miners, explorers, and if you want to find out about those, I don't mind letting you know, but I'll do it through Patreon. Yeah, you can join Patreon, my Patreon, for just $1 a month. And if you want to contact me, I'll give you some ideas, not advice. I recommend people do their homework as well. So with that, let's look at where the markets are this morning. So it's 8:45 a.m. London time. We'll start with gold. Gold, of course, overnight has traded above 1900. I think during the day yesterday it went to 1901. Overnight the high has been 1902.78. The low has been 1888. Right now we're at 1893. So we're down about $5. Gold price seems to be moving steadily higher. Spot silver is actually up 10 cents. The high's been actually 24 overnight. The low has been 23.75. So silver kind of underperformed a little bit yesterday, and today is outperforming a little bit gold. Stock market has rebounded. The Dow futures is up 0.2% or 210 points. The Nasdaq future is up 0.75% or 110 points, and the S&P 500 future is up 2/3 or 29 points. The FTSE is up 1/3% or 28 points. To the currencies, sterling is at 136.37, up just under 0.2%. The euro is up 0.1% at 113.75. Dollar's up 0.25% versus the yen at 115.23. And the dollar is at a 4-year low versus the Chinese yuan here. We're just above 632. So it's not looking good for the dollar versus the yuan. The key level, I would say, in terms of round numbers, is 630, and then around 624. That was the low from March 2018. So not looking great, the dollar versus the currency of the second biggest economy in the world. Continuing with the FX roundup, Aussie dollar is up 0.5%, 72.24. The dollar is down 0.25% versus the Canadian dollar, 126.76. And the Kiwi dollar is up almost 2/3% at 67.26. To the general commodities, WTI crude is down 2/3% at 89.50. High-grade copper is up 1% at 456 4.75. U.S. nat gas is down 0.75% at 4.41. To finish off, a quick look at the bond market. The 10-year yield, U.S. Treasury yield, is at 1.98%. It's up 1 basis point. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.